Hey, so good evening, guys. My name is Maurya Hanspal, and we would be talking about in this session about investing. Okay, and more about investing, and we would be talking about the market in general. Okay, and today is like 31st of January 2022, and tomorrow we have 1st of February 2022. And again, 1st of February 2022 is the day for budget, right? And a large number of stocks would be impacted by whatever decisions are taken in the budget by our Honorable Finance Minister, Ms. Nirmala Sitharaman. Okay. So there might be some stocks that would benefit. There might be some stocks that might not benefit. Okay. And the huge impact of all the decisions in the budget, which would be made by our Honorable Finance Minister, Mrs. Nirmala Sitharaman, can impact the stock market, it can impact the commodity market, and also it can impact the forex market as well, like where the currencies are being traded. Okay, so if we talk about in general about the market in today's session, okay, and talk about like some of the stocks, though I'm not recommending any of the stocks to you, but talking about some of the stocks in general or how the market has performed like over the time. During the previous week and the previous 2 weeks, we saw the market has been corrected from like 61,000 plus level to 57,000 levels. The today we saw the market level at around like 58,000 or 58,150 and all. So that was a good level. So what happened basically? Why was the market like currently falling? Okay, so let me talk about like some of the reasons why market was continuously falling from the past 1 week or 2 week. The one reason that we call it as the first reason which I would like to discuss in today's session is because of the high valuations of the companies that these companies are commanding for. Okay, but completely agreed that the high valuation of the companies are completely justified because these companies are still earning the huge revenue. These companies have the profitability, and ultimately these companies have a P value and a value of EPS which is ultimately positive. Okay, but still there is a difference between like what the earnings of these companies are and what kind of valuation these companies are demanding from the market. So that is the kind of correction which the market is facing currently. And that is the reason why huge number of foreign institutional investors, as we popularly call them as the FIIs, they have taken huge outflows from the market, and huge capital outflows from the market have been witnessed in the previous weeks. For example, around 15,500 crores were taken out from the market because the foreign institutional investors, they invest a huge chunk of money in these tech businesses, in these startup technology companies, be it your Zomato, your Nykaa, your Paytm, your Policy Bazaar, and also your financials as well. Okay. So that was like one of the reasons why the market reacted so much in the previous days because of the excessive valuations and the foreign institutional investors were taking out money from the market. So if a large number of people were putting out money from the market, then where these people were putting their money? People were putting their money into the bond market. So I would be coming back to the concept of bond market once again. So coming to the concept of excessive valuations. Okay. Though the companies have fundamentals, and that's where the market started to begin. The market started to move ahead like once again. The scenario, if we try to compare this scenario with the 1999 and 2000 scenario when we had the dot-com bubble, the top tech companies or the IT companies, they crashed and they crashed the market. We had the webcam, we had the websvan.com, we have the pets.com. At that time, these companies did not have any fundamentals. It was just the irrational exuberations that were driving these companies high. Now, what exactly do we mean by irrational exuberations? By irrational exuberations, we mean that when everyone is buying the stock, the other people are also buying the stock. And the stocks or the companies that have been bought by the people, they have no fundamentals at all. They have no earnings, they have no EPS, they have no PE. But since everyone is buying these companies because of the pent-up demand or irrational exuberance and having no fundamentals, these companies rise for a certain period of time. And after that, when the people recognize that the market is getting overvalued, they understand the concept of excessive valuations, irrational exuberations, and pent-up demand, the stock price of these companies start to fall. The same thing happened in 2008 when people were trying to accumulate houses at a lower rate of interest. And the banks, for the sake of their profitability, they started to lend the subprime borrowers, and not the prime borrowers. The Fed, it increased the rate of interest and everything collapsed and the market crashed. The same thing happened in the beginning of 2022 when the lockdown was imposed, like due to the COVID. The stock market crashed. But after that, the market rose, and again the market started to correct. So one thing I would like to discuss: this is not a crash; it's just a correction, and these corrections are healthy. A correction up to 10%, 15%, 20% is completely fine. But if the market is falling up to 50% or 60%, it's bad. It's a crash. More than 30%, it's a crash. So one reason I talked about was about excessive valuations. So if these persons are taking out money from the Indian market, where are they putting their money? They're putting their money in the bonds because the Fed has promised to increase the rate of interest at least 3 times. And the first rate of interest rise would be in the month of March. And that is the reason these bonds are giving high yields as compared to the equity market ultimately. When the bonds start to give a high yield, though they have started, the yields have started to rise. The US 10-year treasury bills or 30-year bonds, the yields have started to rise. And as a result, the people would be taking out money from the stock market and putting it in bonds because people are greedy. But what I popularly say in terms of Warren Buffett, be fearful when everyone is greedy and be greedy when everyone is fearful. So when people are becoming greedy and they think that they would be earning more yields in the bond market, they're trying to sell their shares, their stocks, and huge capital outflows. More than 15,500 crores of capital outflows have been witnessed in the stock market in the past 1 month or 2 months. All this money is going into the bond market now. All the money is going into the bond market because the people are getting high yields. But that is just temporary. Why? Because when people would start to buy the bonds, the yields would fall down or will fall. Because there is an inverse relationship between the price of bonds and yields. When people will start to buy the bonds in terms of US dollar or any other currency, the currency of that country would be appreciated, but the price of bonds would rise and the yields would fall. And that the central bank cannot afford to do so. Because ultimately the inflation rate is very high in US as compared to India. And the difference between the CPI, the consumer price index, and the wholesale price index has also increased. And that is further creating the problem between the people, especially in US. So that's a short term in nature because now the US has shifted its idea or the consideration from growth to inflation. Because again, the US dollar is high, the employment rates are high, and the bonds yields are starting to rise. But again, it's just a temporary in nature. Okay, because people will start to buy the bonds and ultimately they have to diversify their portfolio. And having just bonds is not good. Because when yields would start to fall, people will again come back to equity markets. Right? So that is one of the reasons which must be taken into consideration. Today, as on the date of 31st of January, 2022, and why I'm specifically mentioning the date, there might be some people who might watch this video 1 year from now, or 2 years from now, or 10 years from now. So specifically, if I say about 31st of January, 2022, on this date, after a correction in the market start to rose today. Why? In its recent times, on Saturdays and Sundays in the US stock market on Friday evening, the yields on these bonds, they started to fall because of the good earnings from high tech companies. These tech companies or the growth stocks, which are affected by the high yields in US bonds, are the most that get affected by the increasing yield. So recently, just 2 days back, when the Indian market closed, the yields in the US, they started to fall because of the growth in tech companies. Okay, so there was some correction in the yield as well. And the correction can also be in terms of yields and not only in stocks. Telling you about the latest news. Today, the RBI, the Reserve Bank of India, has exchanged the bonds. They've exchanged the short bonds, the short-term bonds, which were due in the fiscal year of 2023. They have exchanged these bonds and rolled over the maturity and purchased the long-term bonds, which are due for more than 5 years or 7 years from now. So in the budget, the people will wondering that the finance minister will also have to make an appropriate budget to pay these bonds of RBI. But now, if these have been exchanged for the long-term bonds, which would be due for 5 years or 7 years from now, in the fiscal year of 27 or 28, that budget has to be reduced for that. And now we have to see that where that budget would be allocated. So again, if the RBI has exchanged these bonds and have exchanged the longer term bonds and sold the shorter term bonds. Okay. Again, it like reduces the rate of interest in the market, because ultimately they have exchanged their bonds. They've exchanged their bonds. If the government had to pay them, like for example, the short-term 10-year bonds, अगर वो market में बेचते, the government would have paid them. And when they would have paid them, the government like would have purchased, and the liquidity from the market would have like reduced, because again it's a repo rate kind of agreement against a collateral, against a security or a bond. The government has to pay them, and the RBI is sucking the security from the, but like they have stopped it and they exchange it for the longer term bonds, right? They exchange it for the longer term bonds. And now since they have exchanged, the yields fell, the Indian bond yields fell, and the stock market rose. So these are some of the basic scenarios of the concepts which are prevailing in the market. So like basically, so let's see for tomorrow on 1st February 2022 that what the finance minister, which is Nirmala Sitharaman, has to say like about the budget. That was all.